You are listening to ChartingWealth.com for Thursday, the 25th of May, 2017. We see that stocks are up for the day, gold, bonds, everything. And if you will stay tuned at the end of the program today, I'm going to show you the magic chart that is going to motivate you to keep doing what we're doing, even through the summer doldrums where it gets hard. But I'm going to show you an incredible chart. And it involves this first chart that we look at, the S&P 500. So stay tuned for that. Let's jump into the weekly chart on the S&P first and then go through our other three charts. We're in confirmed down moves on the weekly chart and on the two-day chart. But are we? Let's look at what the weekly's doing. It's still confirmed down, but it is going up. It's moving up very quickly, it does appear. We're looking at the PPO, the price percent oscillator. It is actually angled up toward the signal line. Hasn't crossed over yet. Derivative oscillator is also losing tons of energy. We'll continue to see what happens. The S&P up again for the day, 0.22%. For the week so far, we have a green open box candle. Now, it was looking even better last week, and then all of a sudden it dumped on us. If you remember what happened last Wednesday when the market slammed down, well, that caused a crossover going down, of course, on the two-day chart. Now, let's take a look at what's happening. That two-day chart is doing its best to cross over going up. When that candle actually closes on the 25th, that is Thursday, at the close of the day, we shall see if indeed it is a crossover going up. It's trying its best to do that. Derivative oscillator still in the negative. In fact, over the prior two-day candle, derivative oscillator has not lost any of its downward momentum. So we'll continue to watch and see. Remember, we are almost in a confirmed reversal on the two-day chart. We don't move that line and redraw it until we don't have a vertical crossover until the two-day candle closes, and it does not close until the end of the day on Thursday. So we shall wait and see. Needless to say, that would put us out of any trade at the time being on a down trade as far as the S&P goes with all of that upward momentum and movement. Let's continue to see what we see on the Qs. Of course, the Qs on the weekly chart has continued to go up even further. It did close above the weekly trend line, and if we zoom in a little closer, and again, derivative oscillator continuing to go up and the PPO, but if we take a look at that two-day chart, we see that it did not cross over, even though the derivative oscillator is continuing to gain downward momentum. The PPO, which is our main indicator, price percent oscillator, it has continued to move up and is actually moving away from the signal line. Remember, we're in a confirmed up move on the weekly and on the two-day. Let's take a look at that 4-hour. What do we see? Of course, we saw that happen yesterday. For those of you who jumped in either in the afternoon, which again, you're waiting for that candle to close. Hopefully you jumped in around 10:30 in the morning if that's what you wished to do to jump into this move. We know the charts are getting long in the tooth, and we are getting into that summertime trading zone. And what do we see going on? Well, the market did continue to move up, and we did have the reversal that we were looking for in the 4-hour chart, and then the crossover going back up. So that is our typical traditional method of jumping in. And of course, you would have seen some decent, over the course of the day, about a quarter or so of price appreciation. Not bad, but again, do be careful. But we have all of our charts moving in the right direction. We're well above the two-day and above the weekly chart. We had the pullback and, of course, the crossover going up. So you're doing everything the right way. Just continue to monitor what's going on. The Qs has had a beautiful, nice long run up, and of course that pullback, and then that other crossover on the weekly chart, which we had for the weekly vertical crossover. That was on the 28th. It's hard to see on the current chart that I'm looking at. It's covered by the blue, but it's there. And we had the two-day on Thursday. In fact, it's easier to see on my two-day chart. We had the 2-day happen that prior Thursday, the 27th, and then, of course, we had the weekly vertical crossover on Friday, the 28th, and then we had our jumping in point back on the 1st of May. Then we had that rollover, got out when the 2-day chart crossed over going down, and then jumped back in when we had the pullback and the move back up on the 4-hour chart. Let's keep pushing through these charts. We're now going to go to TLT, that's the 20-year bond, confirmed up move on the weekly and the 2-day. We had that 2-day weekly vertical crossover on the week ending the 19th of May. And then, of course, if we go to the 2-day chart, we can see that it crossed over on the 19th, going up. The 2-day chart did also. And what do we then have happen? Well, we go from there to our weekly, from the weekly to the 2-day to the 4-hour chart. We've had the rollback underway. We're waiting to see if indeed there's a crossover for the 4-hour chart to then jump in. And we have not had that happen yet. So continue to watch for that on bonds. Like we said, bonds were up for the day nicely at just over 0.5% at 0.57%. Lastly, we will go to gold. Gold up 0.40% for the day. Gold has just refused to cross over going down on the price percent oscillator. Did cross over on the derivative oscillator all the way back on the 19th of May. And we just have not seen any crossover going down. We've started to see up movements in gold. Now, if we take a look on the 2-day chart, what do we see? Well, it's still in a confirmed crossover going down, getting close to crossing over going up. Don't have a trade there yet. But of course, you've heard us talk over and over again, and I know plenty of you love looking at the 4-hour chart and using it as your total trading chart. Why? Because it works. Of course, it pretty much peaked out all the way back on the 17th, Wednesday the 17th, rolled sideways down a little bit, popped up again, hit a new high, which was where the old movement had stopped, but closed at a new high on the 22nd, rolled off since then. So just keep your eye on a crossover potentially going down on that 4-hour chart. Hasn't happened yet. Looked like it was getting a whole lot closer at the end of the day on the 23rd and then the 24th, but we've seen it now start pulling up. So we'll continue to keep an eye on things as the charts turn. Now, what I promised you, the special motivator. I want you to look. When people say, what can charting really do for me? Look at the quarterly chart, which goes back, what, almost 20 years? How beautiful a chart is that? You can see where the market crashes occurred. You can see your buy-in points to get out of the market, your buy-out points, your sell points. You can also see your buy-in points on market run-ups, your sell points before as the markets start to turn, your buy-in points. It is a beautiful chart. It is the quarterly chart. We saw a very bizarre thing occur at the end of 2016, beginning of 2017. The market started to rotate over in around actually mid-year of 2016. I sort of call this the Trump effect, and all of a sudden it changed over and switched back over, going up with Trump. I don't know how to explain it. There's nothing else like it going back 20 years or so, but it did cross back over, moving up. Whether it's going to stay that way, still very hard to call, so close to call. But when we go back over the last 20 years, this quarterly chart, if all you did was buy in when the quarterly chart crossed over, sell when the quarterly chart crossed over going down, you would have captured the majority of all the good, beautiful things the market could have yielded for you and stayed away from the crashes. And folks, this is not rocket science. This is just charting. Charting 101 with nothing but a quarterly chart, looking and simply 4 times a year and doing nothing more than that to tell you when to buy and when to sell. Is that not beautiful? Thank you so much for joining us. You want to know more about what we do? All you have to do is sign up for our newsletter. Go to chartingwealth.com. Sign up right there. Follow us on Facebook, Twitter, Instagram, YouTube. We appreciate all of you who subscribe to our YouTube channel, going on thousands now. We appreciate that. Also on iTunes. Go there, give us a 5-star rating, say something nice about us. You can also follow us on Facebook at Charting Wealth. We appreciate you. We love to hear from you. Write us, cw@chartingwealth.com. We are here for you. When you sign up for that newsletter, what do you get with it? You get our How to Read a Stock Chart video, a link to that. You get our layout that we use at freestockcharts.com. None of this costs you anything. That's what ought to be one of your motivators. 10 minutes a day. We also send you links to all 3 of our worksheets, our trade worksheet, our daily market worksheet, and our weekly market worksheet, which will totally supercharge your training. So join us, chartingwealth.com. We're all about teaching you how to read these charts so that in the future, when you learn how to do this, you can take care of yourself, your family, your finances. Here to empower you. God bless. All the best from chartingwealth.com.